This episode of the What the FinTech podcast is sponsored by GoCardless. Hello and welcome to another brand new episode of What the FinTech, the podcast from the team behind FinTech Futures and the Banking Technology magazine. My name is Paul Hindle, editor of FinTech Futures, and for this episode we're joined by Lewis Turek, General Manager of North America at GoCardless. Lewis, welcome to the show.
Thanks very much. Great to be here.
Excellent. It's great to have you here. And just to get started, would you like to quickly let us know a bit more about yourself then and your role at GoCardless?
Sure. So GoCardless is the world's leading account-to-account payment company. Some 85,000 customers using us for direct debits and pull ACH around the world. I lead our North America market. I'm not originally American, you might be able to tell, but I left the UK coming up on 4.5 years ago to lead our growth in this market, and it's super exciting.
Excellent. Sounds great. And again, it's great to have you here, and thanks so much for taking the time out to speak with us today. So on the show this week, we'll be taking a look at the evolution of payments in North America amid the rise of an array of digital and alternative payment methods. And we'll dive into how businesses in North America differ from UK and European companies when it comes to managing their payments, the challenges faced by North American businesses when it comes to adopting new payment methods and how to overcome those, what's next for digital payments in the region, and we'll also learn more about some of the work GoCardless has been doing in the region as well. So, Lewis, to start off then, how would you say the payments landscape in North America has evolved over the last few years since GoCardless entered the market?
So I think the payments market over here is very different to the rest of the world. It's the largest payments market in the world, but in some ways we're very behind. It was only COVID that really drove contactless payments on cards, and still to this day, many credit cards don't have a PIN number. We're still signing things, which is incredible. It's 2025. Checks are still so prevalent. Yes, paper IOUs. Over 40% of B2B payments are still made using paper IOUs, using checks. It's absolutely crazy. But we have seen good innovation. On the consumer-to-consumer payment side, we've seen the likes of Zelle and Venmo. Zelle run by the banks, Venmo its own company, and it becomes a verb, a bit like, I'll Uber there or I'll Uber home. Venmo has become a verb over here. I'll Venmo that to you, or we can Venmo the payments between us. So we've certainly seen the desire for payment innovation. We're still not completely there, but we're seeing a real transition now as we see ACH grow, as we see bank-to-bank payments growing again.
Sounds great. GoCardless is obviously a global payments provider as well. So how do businesses in North America differ then from UK or European companies when it comes to managing those payments?
So I think we have to split it into business to consumer and business to business. So in the UK, for example, at a business to consumer level, every consumer knows their account number and their sort code. I still remember my account number and my sort code, and I left, as I say, 4.5 odd years ago. Yet I don't know my US account number and routing number off by heart. It's not something that we typically know. In the UK, folks are used to the idea of direct debit, of paying for their bills automatically and uploading their bank details. Again, that's something that is slightly less common over here. But from a B2B perspective, we've seen a real shift. What we've seen is companies desperately trying to get away from accepting credit cards, typically 3.5%. And when you talk to a company and say you're getting 97 cents on every dollar, that's the real trigger moment. And we're seeing more and more companies pushing away from credit cards and wanting to go towards automated payments, whether that is asking people to push them wires or our preferred method of pulling that money automatically, whether it's quarterly or monthly, annually, etc. And the ACH network, similar to BACS in the UK or PAD in Canada, BEC, SEPA, etc. around the world, ACH grew 6.7% from 23 to 24. 33.6 billion payments last year. That's $86 trillion. It's growing massively, and it's a piece of the market that we play in, but it's clearly showing that companies want to be paid this way.
Excellent. Yeah. I mean, if you've touched on a few things. I mean, what are the pain points then that you're seeing for North American businesses at the moment?
So we'll often hear that they employ large teams to chase and collect overdue payments. Let's think about what an invoice actually it is. Hey, Mr. Customer, hey, Mrs. Customer, I've provided your work. Could you please pay me? And then the chaser is, hello, me again. I'd still like to be paid, please. And then the third reminder or the third chaser is, I really would like to be paid. And eventually they get paid late. Now, imagine if we go to the local grocery store and I've got my pint of milk and I get to the cash register. It's like, well, I'll pay you later. That just wouldn't work. I'll pay you when I get round to it. Well, that just wouldn't work. So what we're seeing is many more companies saying, all right, either you pay us before or you agree that you will pay us automatically and we'll take the money that is due from us. It's a subtle difference to asking people for money, please pay me, rather than just saying, you owe me this, so I'm going to take it.
Yeah, and I mean, you obviously touched on a few things at the start of the episode as well, as about check usage in the US, still having to sign things as well. I mean, do you think it's fair to say that North American businesses aren't as advanced as European businesses when it comes to their approach to payments?
I think startup businesses in America are embracing new forms of payment. They're setting themselves up for success. It's the older businesses that perhaps haven't yet embraced it, that are still receiving all those checks, and they're employing 2 or 3 people to read through all the checks, to then manually add them to their bankings, to their invoicing, to their payment systems, and then in some cases driving them to their local branch. It is genuinely amazing that we at GoCardless still have some customers who pay us by check, and someone has to take those checks into a bank branch, join a line with a bunch of other people at business bank branches who are paying in checks. It's 2025, for goodness sake. We shouldn't have IOU pieces of paper. It's incredible.
So on the surface, by using well-established traditional ways to pay, it could be said that North American businesses are risk-averse. Is that something that you'd agree with?
I think what I'm seeing is businesses are risk-averse to change. What we're not seeing is companies going, okay, we're going to move all of our payments from one method to another. I think what we're starting to see is that companies will add different ways of receiving payments and then realize that these are better ways. But the reality is that our current payment systems are broken. The world around us has moved on so much over the past few years, but the way we pay hasn't. There are amazing technologies out there, but we just aren't seeing companies going full speed at them and grabbing them. And I think that's where ACH is a safety net. Everybody knows ACH. It's been around for decades. And whilst we haven't seen adoption throughout the country of FedNow, for example, which is something very new, we have seen huge adoption and growth in add-ons to ACH. Same-day ACH, for example, grew and topped the 1 billion payments mark, $3.2 trillion last year. Again, that's considerable growth where I think companies see it as slightly safer because it's underneath the ACH wing, as opposed to this brand sparkling new FedNow, which has its own challenges.
Excellent. Yes. I mean, obviously you mentioned their shift towards kind of ACH payments. I mean, from consumers and businesses as well, then are you seeing more of a shift then just generally towards digital or alternative payment methods in the US now? And what trends are you seeing there?
Absolutely. The shift is happening. Cash is becoming less prevalent by far. And I think we're seeing at a consumer level, technologies like Apple Pay, the ability to just send money by tapping each other's iPhones. As I mentioned, Venmo and Zelle, all very, very easy. And now businesses are expecting that too. And businesses want as many cents to their dollar as they can get. And why wouldn't they? In the US, what we're also seeing is more and more companies now adding surcharges to pay by credit card, something which is outlawed in the UK, and end users don't want to pay those fees. So they are also looking for alternative ways to pay so that they don't need to pay the fees of the credit card merchants.
And so What would you say the key challenge is then when it comes to the adoption of new payment methods? And what do you think needs to change going forward to speed up the process in North America?
There aren't incentives at the moment that banks or financial institutions provide for their customers to accept or use or promote innovative payment methods to their users. In the UK, financial institutions have been mandated to create open banking APIs and new innovations, but we don't have that same push here. Last year, CFPB launched 1033, the starters, if you will, to open banking in North America. We have a new administration in town. It's unclear if CFPB will even be around in a few months' time, and certainly unclear if 1033 will have the legs to continue. From GoCardless' perspective, that would be a shame. Having regulation around open banking, having everyone going in the same method, having data out there anonymously so that other companies can use smart decisions based on anonymized data, we're all for, but we'll just have to see if CFPB remains a thing.
Sure. I mean, on the concept of open banking, I mean, I spoke with one of your colleagues, Paul Foster, last year about the rise of A2A open banking payments in the UK. I mean, is that something that you expect to see gain momentum in North America as well? And what kind of challenges exist there for its future adoption?
Paul's a good guy, and he's got a really good perspective of the markets across the world, including Europe and APAC. There's no denying the UK's led the way with open banking payments, and it's been really exciting to see. GoCardless in the UK has been absolutely leading those efforts, working with the government. And it's great to see that other countries now have a blueprint and a clear examples to learn from. As I mentioned, the US, we thought we were there with 1033 or Dodd-Frank as it was called. Will it happen in this administration? I think probably not. Will it happen in North America within the next decade? I think it probably will. But like everything in North America at the moment, there's a lot of change.
Welcome back to What the FinTech. We've extended the deadline for the Banking Tech USA Awards 2025. You now have until the 21st of February to submit your nominations. This extra time gives you the perfect opportunity to showcase your cutting-edge solutions, celebrate your team's achievements, and position yourself as a leader in the industry. Don't miss out on this chance to gain recognition on a national stage. Head over to informerconnect.com/banking-tech-awards-USA and submit your entry by the 21st of February.
So what's a big misconception then with payments in North America that you wish people understood more about?
I think there's a huge misconception that using a different or a new payment provider or trying a new payment technology is expensive or that it requires significant amounts of budget. And that just isn't the case if you look at the total cost of ownership. Reducing the fees that you're paying for every transaction will easily outweigh any initial costs of introducing a new payment technology. And then payment failures as well. Cards have an average failure rate of 7.9% versus ACH POL of under 3%. When a payment fails, businesses spend on average 11 to 15% of its value trying to recover it. So not only are you paying 3% of the bill to get that money, you're then having to spend another 11 to 15% to chase it. On average, businesses that use GoCardless, report 21% improvement in efficiency, and this is the crazy one, 59% less time spent managing payments. So is there cost in bringing a new payment provider on? Yes, there is cost. But if we look at that short-term cost versus the long-term cost of chasing payments, of going after your customers and asking them and saying, please pay us, and then paying for the privilege of receiving that money, I think it is a big misconception that it is too expensive or too risky to introduce new payment providers.
Sounds great. And I mean, payments fraud in North America spiked last year. And with the rise of technology such as generative AI and deepfakes, how difficult is it to keep ahead of the fraudsters in the industry at the moment? And what kind of work needs to be done to protect people from scams and fraud?
Look, fraud and fraudsters are constantly evolving. And legacy anti-fraud solutions are struggling to keep pace. I think in 10, 15, 20 years, we will look back, or the kids of today will look back in university and in college at how we've handled fraud and how we've handled deep fakes and how we've handled cyber attacks and how some companies have done it very well and some companies have done it less well. 2 years ago, we launched GoCardless Protect Plus, which is a prevention tool that specifically works to stop fraud before it even takes place. It uses AI-powered intelligence to analyze millions of data points from across our platform, accurately predicting fraudulent behaviors to flag a risky end user before they've completed that checkout process. It's continually adapting. It's fair to say the system is so much better than it was when we first launched it 2 years ago, and it will continue to get better as it learns more and more, and we evolve at the same pace and hopefully ahead of the fraudsters. It's built specifically for bank-to-bank payments and integrated into the GoCardless system. So I like to think of it as it's our way of fighting fire with fire.
So, with the popularity of digital payments now, do you think a fully cashless society could be on the cards in the future, or will there always be that need for cash or checks in North America?
It's a super interesting question. A common misconception that we hear a lot is that in order to adopt new payment methods, you have to stop using an existing one. And that simply isn't the case. They can be complementary together. Saying that, I went for coffee this morning at a local coffee place. I was chatting to the manager, and she said that they have completely gone cashless, and the benefits massively outweigh the risk of keeping cash on premises, someone having to walk that cash to the bank at the end of the day. I also saw in the press last week, Elon Musk saying that a cent coin, a penny coin, costs 5 cents to make, and we shouldn't have any cent coins. Now, I take that with a pinch of salt. I'm not sure whether that's true or whether that's made up, but the logic of it, very sound to me. So cash use will decline in favor of digital, faster ways to pay. However, there are groups in society that are less tech savvy. There are companies that are less tech savvy. So do I think we'll go fully cashless? No, I don't. But I think we will continue to see paper and coin cash go down and down, and maybe in 50 years we'll be there.
Excellent. Sounds great. And to finish off then, what would you say are the next steps for digital payments in North America then? And are there any payments developments that you're working on at GoCardless at the moment you can tell us about?
So the adoption of digital and direct payments will continue to increase over the next few years. And I think those businesses who want to get ahead of their competitors will be the ones who offer a suite of payment methods to their customers today. And as these months and years go on, they'll start to push payment methods and prioritize payment methods that are better for the companies as opposed to perhaps being better for their end customers. In just a few years of being available in North America, we've launched ACH debit, faster ACH, Paul, for fast recurring payment collection, verified mandates, and as I mentioned, Protect Plus for anti-fraud, Success Plus for automated retries, and increased our extensive list of partner integrations over 350 globally. So I can tell you we're doing a lot, and we are seeing the market adopt it too. Now, what does it look like for 2025 and onwards? We've got big plans. We're continuing to invest in our platform with our product teams continuously gathering feedback from our customers to drive improvements and updates. I can't reveal everything we're working on right now, but I'm very excited for what's coming this year.
Thanks again, Lewis, for chatting with us today. To close out the podcast, we have our now infamous Fintech Jail. So this is where we ask for an industry term, buzzword, or trend that you've seen or heard enough of. Or, of course, you can advocate to free one of the previously incarcerated terms. So what's your selection for this week?
I've got to tell you, I thoroughly enjoyed the thought process of this. And there is one word that came immediately to mind, and it's a word spelt differently from where you are today and where I am today. And that's checks. It's 2025. Whether we spell them with a Q or whether we spell them with a K, there can be no possible need in this world for checks to exist. There can be no possible need for me to write on a piece of paper, I really promise, I pinky promise to pay you $500 signed by me. And oh, oops, I've put the date as 7 months ago by accident, so now you can't cash this. Oh, oops, I've put the date for 2026, so now you can't cash this, yet you've now provided the service to me. It's 2025. We can do instant bank payments between consumer to consumer, from consumer to business, from business to business, and those technologies we should be embracing. And I wholeheartedly put forward checks to go into FinTech Jail, and I hope I'll meet no opposition.
I mean, yeah, you'll meet no opposition from me. That's for sure. But it's a surprise it's not actually in the jail already, to be honest. But personally, I feel like I stopped using or even seeing checks in the UK at least a decade ago, if not longer. And given, like you say, the prevalence of new technologies, you kind of forget they even exist points over here. So it's always a surprise to me to hear that they're still going strong in places like the US as well.
And it really is still going strong here. When I came here 4.5 years ago, I went to Bank of America, I set up my account. A few days later, a debit card arrived, and the following day, a book of checks arrived. And my first reaction was, oh, bless. And in 4.5 years, I've used none of those checks. But if we think from a B2B perspective, the data is there. Checks are still being sent, sometimes correctly, sometimes wrongly. And I can assure you that the US Postal Service is not great. The Royal Mail is brilliant in comparison. So when checks are sent in the mail, how many are being lost? How many of them being mishandled? How many are being wrongly processed? How long do we have to wait for checks to clear? All a check is a bank-to-bank, account-to-account payment. But it's a 1920s way of doing things. Using GoCardless Pull ACH, we should be taking that money from our customer's bank account automatically on time and receiving it as close to instantly as possible.
Yeah, and I guess before we officially consign checks to the jail, I mean, how long do you think it would realistically take to fully phase out checks in North America?
It's going to need some real pushing from the banks. The first thing we need to do is banks need to stop offering checks or make checks prohibitively expensive. We've started to see that happen. Wells Fargo charge customers now for a book of checks. Bank of America charge certain customers for a book of checks. I don't think the banks really want to still be doing checks. So what we've got to do is start changing the mindset of people that they don't want to pay by check. That stops the pushing. We've also got to talk to companies and encourage them that there are better ways. And whilst there is a risk to changing how they do things, offering people some form of incentivization to not pay in this way, giving people a $50 one-time credit is worth it to get them away from checks. Could we do it? Easily. Will we do it? Maybe. How long would it take? We could do it within a decade.
Interesting. Excellent. Yeah, well, it'll be good to see, like I say, in the next 10 years, whether they have been completely removed. Maybe this throwing it into the jail is the kind of a kick it needs to finally get it over the line, maybe. But I'm more than happy to throw checks in the jail this week then, and I'd be very surprised, like I say, if anyone wants to break this one out again. But for now, Lewis, thank you so much again for joining us for the podcast today. It's been a pleasure.
Really appreciate the time. Thanks very much.
Well, that's all we have time for this week. Thanks, of course, to Lewis for joining me. As for FinTech Futures, you can find us online at fintechfutures.com. And be sure to follow us on LinkedIn to keep up with the latest FinTech news. If you like this podcast and our other episodes, you can subscribe on Apple Podcasts, Spotify, SoundCloud, or your favorite podcasting service to get notified about future episodes. Thanks as well to Arama for editing this podcast. You can check them out at arama.tv. As always, thank you very much for your support, and we'll see you soon for another episode of What the FinTech. But until then, goodbye.